As you look at futures going down at the opening bell this morning, bring in Gregg Smith, our venture capital kind of guy. Greg, I'm going to scroll through a list of SPACs that you like. I've got Churchill Capital, Starboard Value, DMY, Humanco, Lionheart Acquisition, Lux Health, CC Newberger, Horizon Acquisitions. We'll go through the list of them. We'll put them up on the screen. I know you like them all. But look, these SPACs and these hot IPOs have introduced what I think is a casino-like atmosphere to the market, and I don't think that's healthy. Answer that, will you?
Good morning. Well, Stuart, every day we walk in and we wake up and it's almost like SPACapalooza. We see news of a new transaction of a SPAC acquiring some private company. We witness that SPAC trade from maybe $10, $11, or $12 and perhaps double or triple. So I have adopted what I'm calling an aggressive cash management strategy ahead in an effort to try and be a patriotic American. I am trying to reserve and put aside a certain amount of cash ahead of paying my taxes on capital gains in April. But as we all know, there's no interest to be found in the bank. So I am allocating about 25% of that cash to a portfolio of about a dozen SPACs that you mentioned, because I look at it that my downside in academia is about $10, right? These SPACs all have $10 sitting in trust, and in a perfect world, my downside should be $10. But if I get lucky in the next 2.5 months and any one of these SPACs announces a transaction, I have the ability to see that $10 bill maybe go to $20 or $30 and actually juice my returns ahead of paying taxes. But if there's a calamity or a cataclysmic macro event in the world, people will be selling dollar bills for 80 cents or 90 cents in an effort to raise cash. So this is not for the faint of heart, but I did this in an effort to try and juice my returns on my cash that I'll be using to pay taxes in April.
Greg, you make a lot of sense, because if the downside is limited to $10 for each share you've got of a SPAC, you know your downside risk is limited. And you also know that in this atmosphere, your upside potential is pretty good. Make a good case.
Yeah, look, in theory, right? In theory, but if there's another macro event, people will be pretty quickly selling these SPACs in an effort to raise cash. And you'll see these SPACs trade right through their cash value floor of $10. They'll go to $9, right? When people need liquidity, they grab liquidity wherever they can. But if the market continues to stay status quo, if we continue to have a risk-on environment, you have a good shot of these SPACs trading up and juicing the return.
We wish you the best of luck, Greg. That's a good way of paying your taxes come April 15th. Gregg Smith, right there.